How I make 50 pips daily using this candlestick pattern. If you are interested in Forex strategies that will make you a profitable trader and a better trader, then you have to subscribe and follow this channel. Because we share on a daily basis important strategies, Forex tips that will guide you to becoming a profitable trader. So click on the subscribe or follow button. Also click on the notification bell so you don't miss an update from this channel. Now look at the candlestick pattern. Would you buy or sell? I'm giving you 10 seconds to decide. Well, I believe by now you have made your decision. So, let's analyze this candlestick or chart pattern and see if your analysis was correct. Before you begin your analysis, you need to relax and closely examine the charts. Every parameter and every movement in the charts matter. The candlesticks are the language of the market, so you must take your time to decode and understand their message. The first step is to identify the region where the upward price movement suddenly reversed, leading to a strong pullback in the opposite direction of the overall trend. This region is called a resistance zone, a point where price changed drastically due to a momentum candle. Moving forward, we will monitor such zones in our future trades. When you spot a zone like this, your job is to wait for the price to return to that area, as this will help you determine your next move. Now, observe what happened the second time the price reached this zone. You can see that the price rejected the zone and moved downward, forming a red candle. At this point, our task is to determine whether the price will continue its upward movement or if it will drop further. Now, let's take a closer look at the message conveyed by this red candle and the previous one. Now, the first step in your analysis is to mark your resistance zone by drawing a line on it. This helps you easily identify the zone without forgetting it. Next, you need to identify the area where the previous candle opened. After marking the bullish candle opening area, the next step is to mark the areas of rejection in this particular previous candle. If you truly understand price action, you'll know that when the price reaches a strong zone, it often reverses. We are analyzing this to identify our entry point, as we anticipate the price to move downward next. Once you've completed all the necessary steps, the next task is to set your order limit. Place your sell limit, set your stop loss, and define your take profit. Then, patiently wait for the price to reach and trigger your order. It's important to note that patience is key. You don't need to chase trades. Instead, set your traps, wait for the price to enter your zone, and let the market come to you. Patience is absolutely crucial in trading. Now, let's see how this trade plays out. Do you see what happened? The price entered our zone, triggered our order, swept liquidity, and then went bearish. It reversed and moved downward, putting us in significant profit. At this point, we're already in a strong profit position, but the price hasn't yet reached our take profit level. This is how we accurately mark our zones, identify entries, and capitalize on price movements. The sweep has given us substantial gains, ranging from 30 to 50 pips in profit. You can see that the price has returned to our zone for the second time. As expected, it reversed again and is still generating profit for us. Now, we're patiently waiting for the price to hit our take profit, TP, level. This demonstrates the power of understanding candlestick patterns. Price action is pure and effective. You don't need complex indicators or a screen filled with signals. All you need is a deep understanding of price movement, momentum, candlestick behavior, support, and resistance zones. With that knowledge, you can accurately anticipate where the price is headed. Price is pushing toward our take profit level, we're getting closer. And bam! We just hit our take profit level. You can see the price is still dropping, generating even more profit. With this strategy, you can secure at least 50 pips or even more. Mastering candlestick patterns, support and resistance, and momentum is the key to profitability in Forex trading. Alongside these, emotional intelligence and strong trading psychology are equally essential. This is all you need. Now, let me give you another example to help you better understand. Remember from the previous example, the first thing we did was mark the resistance zone. So, whenever you see this candlestick pattern, your first step should be to identify and mark the resistance zone. I hope you still remember why we are trading this candlestick pattern. Our goal is to identify a strong zone, trade the reversal, and profit from it. The second step is to mark the area where the previous candle opened. Your task is to pinpoint and mark the exact level where the previous candle opened. So, we start by marking where the previous candle opened. Thirdly, we identify the area where the previous candlestick faced rejection. Mark the wick, as it signifies the price rejection and serves as a key zone. Now, set your entry order, which includes your stop loss, entry point, and take profit. Patience is key in Forex trading. You cannot succeed or remain profitable without it. Once your order is set, wait patiently for the price to trigger it and move in your direction. Do you see how the price picked our order exactly at the marked area and then moved bearish? This is a perfect example of a well-executed entry. The price followed our analysis, triggering our order and moving in the desired direction, leading to massive profits. This is how you can consistently make 50 to 100 pips daily using this strategy. The price is dropping, and we've just hit our take profit, another successful trade. This strategy is powerful when executed correctly. Here's a quick recap. 1. Identify a strong resistance zone. 2. Wait for the price to reach and reject that level. 3. Mark your area of interest for entry. 4. Set your orders and let the market move naturally. By following this method, you can consistently catch reversals in a bearish trend. The key to maximizing accuracy is using higher time frames, as they provide clearer signals and reduce market noise. One crucial tip: patience is everything in Forex. Instead of chasing trades, set traps at strategic levels and let the market come to you. This approach increases your win rate and keeps emotions in check.